In the previous lecture, we learned that we set two take profits, one to close the first half of the position and one to close the remaining half. The problem with the MetaTrader 4 is that it only lets you specify a single take profit per position, a take profit that closes your entire position. So how do we handle partial exits? How do we close half of the position at one price and the other half of the position at a different price? There are two main ways to solve this. The first is to split your position into two. Imagine you want to go long euro-dollar at 1.15 for 0.10 lots. The ATR is 10 pips, so the first take profit should be at 1.151 and the second take profit should be at 1.152. Instead of opening one trade for 0.10 lots, you can open two trades with 0.05 lots each. You can then set take profit 1 at 1.151 and take profit 2 at 1.152. That way, half of your position closes at 1.151 and the other half at 1.152, and this allows you to close them automatically at the take profits without any manual intervention. Another way is to set alerts for your take profits directly on the MetaTrader 4. So you can open the entire 0.10 lot position on euro-dollar at 1.15, you set your final take profit at 1.152 in your MetaTrader 4, but you know that you should remove half of your position at 1.151. So you can create an alert on the MetaTrader 4 that sends you a notification when the price reaches 1.151 so that you can manually close half of your position. Let's see how to use these two methods in real market conditions, and then I want to talk about advantages and disadvantages of them. Here we have pound against Japanese yen, and as you can see the RSI is above 75, giving us a signal to open a short position. We still need to wait for the candlestick to close, it's just a few seconds away, so let's see if we can trade this one. Okay, the RSI closes above 75 at 75.45, so we can go to our MetaTrader 4 and open a trade on pound against Japanese yen, which I can quickly locate because I ordered my pairs in an alphabetical order. So let's open a short position. Let's say I want my position to be 0.02 lots, but I want to use the split method. So I'm going to open two positions of 0.01 lot each. Now, we're going to talk about the advantages and disadvantages of each method, but the first problem that you can already notice is that with this method, we don't have a single entry price, but two. So which price do we take as a reference when setting up our take profits? Generally, it doesn't really matter since the two prices are going to be very close most of the time, but I like to take the best price among the two, so that my take profit will be closer. This is a short position, so the best price among the two is 194.191. To set our take profits, let's first go back to TradingView to check the value of the ATR at the moment we open the trade. So the ATR on this candlestick is 0.109, which is 10.9 pips that we round to 11 pips. Let me open the take profit calculator. We have pound against Japanese yen, and I don't remember the entry price. Let's see. We have 194.191. Again, it doesn't make a huge difference which one you take as a reference, since they're quite close, but I prefer to always take the best price. It is a short position indeed, and we said that the ATR was 0.109, which we round to 0.11 or 11 pips. We have our two take profits. It doesn't matter which position gets the first take profit and which one gets the second take profit, as they are just parts of the same position. We just split them into two to better manage take profits without being at the computer. So the first take profit is 194.081 and the other take profit is 193.971. And we have the two take profits just like this. Again, it doesn't matter which position you assign to each take profit, since they're simply two halves of the same trade. Okay, I'm not going to wait till the take profit because I also want to show you how to set up the take profits with the other method, the alert method. So let's close these two positions. And I'm going to set up the same short position, this time with 0.02 lots since I'm not splitting the trade into two. We have our trade with the entry price at 194.167. We checked the ATR before and it was 11 pips after rounding. The final take profit is 2 ATR, so 22 pips from the entry, which gives us a take profit of 193.947. Let's set it up. Okay. Even when calculations seem simple, always double check them with your calculator or with the take profit calculator provided earlier. So 194.167 is the entry price. So the final take profit should be at 193.947, just like we have set it up for our position on the MetaTrader 4. Okay, but we know that we should remove half of our position at the first take profit, at the first ATR level, so 11 pips from our entry, which is 194.057. How do we do that? First of all, let's see how to remove part of our position. Under the size column, double-click the trade, enter the number of lots you want to close, in our case 0.01, and click here to partially close your position when the price reaches take profit 1. But of course, we want to be alerted when the price reaches that level, so that we can come back to our computer and manually remove half of our position. So how to set up an alert on the MetaTrader 4? We have the tab for the alerts in our terminal at the bottom. Let's click on it. And I previously had an alert on gold. I was trading with my main account before recording this video. Let me get rid of it. And okay, so how to set up a new alert? We simply right-click in an empty space in the tab and then select Create. This window will pop up and you can personalize your alert in many different ways, but the three most important criteria I want to focus on are symbol, condition, and value. Symbol simply allows you to select the currency pair you want the alert on. In our case, we want to set an alert for pound against Japanese yen, so all we have to do is to click on the drop-down window, find pound against Japanese yen, and select it. Let me skip the condition for a moment because it's a bit more complicated. Let's talk about value. This is simply at what price you want the alert to be triggered. We want the alert to be triggered when the price reaches the first take profit. Let's check once again where the first take profit was, and it was at 194.057. So we can set the value at 194.057, which means that the alert will be triggered when the price reaches that level, so that we can go back to our computer and remove half of our position. Now let's have a look at condition. The menu offers 5 different solutions: bid less than, bid more than, ask less than, ask more than, and time equals to. We can exclude time equals to right away because we don't want the alert to be based on the time of the day. We want to set an alert based on the price, specifically on the price reaching our first take profit level. Now, I don't want to get things complicated, so I have a trick for you that will speed up the process of deciding whether you need the bid price or the ask price for your alert. When it is a long position, you need bid more than. When it is a short position, you need ask less than. In this case, we have a short position on pound against Japanese yen, so we need ask less than. Alright, this is not over yet. Here the alert is essentially saying, Send me an alert when pound Japanese yen goes below 194.057. But what if the price reaches exactly 194.057, which is the price we need to close half of our trade? The alert won't be triggered because the condition says lower than, not lower or equal. To ensure the alert triggers precisely at our target, add one fractional pip for short positions or subtract one fractional pip for long positions. So here we can add one fractional pip since it is a short position and we have 194.058. This is our alert. If the price reaches that level, the MetaTrader is going to send us a notification so we can make sure to come back to our trading platform and remove half of the position just like this. Okay, now that we have seen both methods in action, we are ready to talk about the advantages and disadvantages of them. In terms of ease of use, I think you'll agree with me that the split method is much easier. We only open two half positions instead of the entire one, and then we set up the take profits. With the alert method, you need to set up alerts, be careful about the price you type, the currency pair you select, and whether you want the bid price or the ask price. It's definitely more complicated and increases the likelihood of making mistakes, especially for beginners. In terms of accuracy, the split method allows you to be very accurate with the take profit. You can set both take profits in advance, so you can be sure that when the price reaches your take profit, your trade will be closed at that price. With the alert method, you first need to receive the notification, then go back to your computer and then manually close half of the position. Even if you manage to do all of this in a few seconds, sometimes even in a few seconds the price can change significantly, so the alert method doesn't guarantee accuracy in terms of take profit. Another point in favor of the split method is automation. The split method allows you to spend less time at the computer since you set the take profits in advance and you don't need to be there when it's time to partially close your trades. The alert method, on the other hand, doesn't allow you to automate the process, since you need to be at the computer when it's time to close half of your position. I will say that the only advantage of the alert method over the split method concerns the entry precision. Splitting the position into two can introduce slight slippage. Even if you open two positions at exactly the same time, you may get slightly different prices. So, taking back the example of the buy position on euro-dollar at 1.15 for 0.10 lots, you may open two positions of 0.05 lots each at 1.15, even setting two orders to buy both of them at that price. But sometimes, because of the slippage, it may happen that you get 1.15 for one position and 1.15 at 002, for example, for the other position. In that case, you may get confused about your entry price, not knowing which one to use as a reference when calculating your take profits. Of course, this doesn't happen with the alert method, because you only open one position, so your entry price is just one. Overall, I will say that splitting the position into two halves is the easiest and most accurate method to handle partial take profits on the MetaTrader 4. This is why from now on in this course we will proceed with the split method.